Ladies and gentlemen, we'd like to start off with this very interesting panel discussion, how digital innovation is changing finance. And I will now take this opportunity to introduce and also welcome onto the dais the speakers and the panelists who are going to be with us during this session. Mr. Samrat Das, Chief Information Officer, PNB Metlife, India. May I request you, sir, to kindly come onto the dais and take your seat. And I will request the delegates present here to put your hands together for Mr. Samrat Das as he takes his seat on the dais. A few words about Mr. Das. PNB Metlife. In PNB Metlife, he's responsible for supervision and management of information technology, managing IT architecture, supervising the development of applications, adoption of tools and methodologies, and collaborates with internal IT team and vendors to ensure customer satisfaction. Mr. Samrat has a rich experience in the field of IT strategy, IT operations across organizations, data center and infrastructure management, IT services, managing IT outsourcing, IT security and business continuity for the past 21 years now. A very warm welcome to you, sir. Our next panelist for this session is Mr. Aninda Chatterjee, Executive Director Finance, WeBEL. May I request you, sir, to kindly come onto the dais and take your seat. Mr. Chatterjee brings over 27 years of professional excellence in the area of finance, operations management, supply chain management, change management, stakeholder management, and many other related areas. He has vast experience in effectively managing and delivering complex projects in the space of profit center operations, commercial operations, finance and accounts, management of merger and acquisition, and strategic planning. He played a pivotal role in setting up India's first greenfield private airport of Category 4C in the state of West Bengal. A very warm welcome to you, sir. Mr. Deepak Sharma, Chief Digital Officer, Kotak Mahindra Bank Limited. May I request you, sir, to kindly come onto the dais and take your seat. Mr. Deepak Sharma heads Kotak Mahindra Bank's digital initiatives, where he drives digital transformation, business model innovation, and future-ready initiatives of the bank. He is responsible for efficiency, productivity, customer experience, and growth of business through digital intervention across digital channels, lending, payments, investments, insurance, trade, and forex across consumer, SME, and institutional banking segments. Mr. Deepak also leads the Innovation Lab, Design Studio, FinTech partnerships, and startup ecosystem participation for the bank. A very warm welcome to you, sir. And our fourth panelist for this session is Mr. Satheesh Krishnamurthy, SVP and Business Head, Affluent and NRI, Axis Bank. May I request you, sir, to kindly come onto the dais and take your seat. Okay, sir is here, and I request you to take your seat on the dais. Mr. Satheesh Krishnamurthy joined Axis Bank in March 2014. Under his leadership, the bank launched their most premium brand, Burgundy, a bespoke wealth management offering for affluent clients. Over the last couple of years, the assets under management of this business has crossed 16 billion US dollars, making it one of the fastest growing business units within the bank and in the industry. A very warm welcome to you, sir. And our chairperson and moderator for this session is Mr. Soumitra Dasgupta, Editor Business, The Telegraph. May I request you, sir, to kindly come onto the dais and take your seat. And a big round of applause for him as Mr. Soumitra Dasgupta takes his seat on the dais. Sir. A few words about him. In a career spanning over 3 decades, the Telegraph's business editor, Mr. Soumitra Dasgupta, has covered epoch-making events ranging from World Trade Organization's ministerial meeting in Cancun, Mexico in 2003, and the G20 summit in Antalya, Turkey in 2015, to Mother Teresa's canonization at the Vatican. He has traveled with 2 prime ministers, Atal Bihari Vajpayee in 2003 to cover the ASEAN summit in 2003, and Prime Minister Narendra Modi's historic visit to China in 2015. He has worked with 3 publications, Business Standard, The Pioneer, and The Telegraph, and has lived and worked in Delhi and Mumbai for over 2 decades. He has also interviewed and interacted with some of the leading business personalities in the country and abroad, including Ratan Tata, Deepak Parekh, and Microsoft Chief Executive Satya Nadella. A very warm welcome to you, sir, and I will hand over the entire session to you. And I'm sure you will have questions, and the chairperson is going to take care of that. Thank you, sir.
Good afternoon. We're here today to discuss digital innovation in the world of finance. The rapid evolution of technology has started to trigger a massive disruption on a scale that we've never seen before. To understand some of the trends and how this is going to play out over the next few years, because there's no way that anybody can predict what's going to happen maybe 5 years down the line. So we have with us a very interesting and illustrious panel of experts to discuss these trends and give us some kind of idea of how digital transformation is changing their own organizations and making more and more people into the system through the process of financial inclusion and all of that. So let's start firstly with the issue that everybody is talking about, and that's blockchain. Blockchain technology, which underpins Bitcoins. So everybody seems to be, excited about this. So I thought the first thing that I would do was to lob this question to my panel, to try and get them to talk about how this is going to play out, how this is working in their organizations, and are there any reasons for us to fear the digital transformation and sharing of information on platforms over which none of us have any sort of control? So let me start with you, Mr. Das. What is the way you are working with blockchain technology within PNB, and how does that sort of change or transform your organization?
Sure. So maybe before we jump into one of this disruptive, word which is flowing around in the market, I think let's give a context around what has been the journey for the last 2 decades, especially in the financial services. So there are 3 phases what happened essentially, and all these 3 phases, the rate of growth was disproportionate than it was expected. The first one was, which is perhaps today when we look back and we say it's vanilla automation. So for all financial companies and a bank, what we did is that we drove efficiencies by automating stuff. And in that process, we also tried to re-engineer a lot of our business processes, and the whole KPI behind that was to ensure the business imperatives are met. Then came the second phase, where it was this whole virtual integrated web, which a lot of times we forget. We talk about e-channels, we talk about e-commerce, we talk about the e part of whatever it was. So that took the automation to the next level and made it more integrated and more virtual in that sense. I'll keep it short, but let me move to the next phase or the next era, which right now we are talking about, is this whole world of digital or disruption. So essentially, if academics, someone asks me, so it's basically leveraging these 4 trends of social, analytics, mobility, and cloud as a means to achieve the business imperatively, disruptively. So this is what it is. So each organization has a set of priorities or a set of issue in hand, and each one knows the best how these 4 levers or these 4 trends of technology one capitalize to ensure you meet your business KPI. But interestingly, with the event of a parallel currency, which is cryptocurrency, there was an event of another disruptive technology which came, which is blockchain, which in a simple thing talks about a distributed ledger, which means today the ledger which is there in organizations are siloed. Can we make it more disruptive? So whether it's a life insurer talking to a medical TPA, a third-party medical thing, or to a bank, or to someone else, why does it have to have in a linear fashion? Can it have on a non-linear, real-time, accurate fashion? So the classic example which people talk about on blockchain in an insurance parlance is, if I'm taking more time, but I thought I'll just give the context.
Go ahead.
So there is this insurance which is not there here in India, is about a general insurance where if you miss your flight or if your flight is late, you have an insurance claim which happens. So there is this case where there's an insurance, a gentleman, the flight is delayed by 2 hours, and before he lands to his destination, the amount of claim is credited in his account. What is the simple thing is a distributed ledger of blockchain enables that to happen. Because you don't need human intelligence, it's just a sequence of events between various entities in a common way. So what we are doing here is that, obviously, as an insurance company, we are also talking about a lot of disruption around this. And this is an interesting phase. So for us, we are a bank assurance company by the virtue it's PNB. So PNB is our bank assurance partner. And one of the use case which is on the blockchain is trying to see whether we can have a distributed ledger between the insurance companies and the bank for all the transactions which we do. And we are working right now on that. Obviously, it's at a nascent stage. But having said that, when you get into integration, law comes in place. What will be the applicable laws? Who owns it legally for every transaction to happen? Will it be the bank? Will it be the insurance company? Will it be someone else, an aggregator, a broker, an agent? I really don't know. These are certain things which is also going in parallel right now on this space of blockchain, and I think it will just evolve as we go ahead in time. So I just thought I'll set the context and put it.
Yeah, so I just wanted to turn to Mr. Satheesh Krishnamurthy now. And you working with, in the area of affluent businesses and creating this NRI space, you've done a lot of great work there. How does technology help you create that space and create that business and grow that business, especially in the light of the competition that you obviously face in the marketplace?
Yeah, I think, thank you, Mr. Dasgupta. I just think that digital is at the center spread of everything that we do today. And I'll give you an example. I think the way we look at our business, we look at three critical components to that. One is at the customer end, right? Customers today are consuming bank services in transformative ways, right? So gone is the era of the customer choosing to come to the bank and wanting to spend that time. We are living in a digital era, so he wants that information on his mobile app. He wants to be able to transact, whether it's buying or selling investment products, whether it is transacting on his bank account, he wants to do that on the go. So that's one big lever which we need to be prepared for and which we are building in a big way. The second big lever is, especially in the wealth management business or the NRI business, which typically attracts the richer set of customers, we need to standardize the kind of advice that our customers get, right? Given that Axis is a large bank, we have over 3,500 branches, what becomes imperative is that the advice that a particular customer gets should not vary depending on the person who is actually rendering that advice. So it's very crucial for banks to standardize the offering. And I think one of the ways that we are actually doing this is equipping all our frontline. And this, in fact, I can tell you from an Axis Bank example that we would have invested in over 25,000 tablets, Pan Bank, right from our customer service officer at the front desk at the branches to our relationship managers who carry tablets to the customer's office or home. They are able to more and more embrace paperless transactions. So I think it really helps. The third critical component, which is typically not spoken as much, is on the back-end side, right? And I think that's where technologies like blockchain are coming into play in terms of how would you want to act far more intuitively and quickly, right? I think Bill Gates coined the business at the speed of thought.
Yeah.
I think, frankly, this is the era where that's getting executed.
Yeah.
So we believe that each of these three components are extremely crucial. So there is the customer end, there is the front end, which is the person who's actually serving the customer directly, and the back end, all the rest of the people in the bank who are actually serving that front end person serve the customer to the best of his or her abilities. So I think on all the three components, we are seeing a transformation with digital as the road for this.
Yeah. Let me turn to Mr. Aninda Chatterjee. Aninda Chatterjee is a person who's worked with the private space and is now working with the government through WeBEL. So we would like you to sort of share your experience about how you've made this transition yourself, and what are you doing at WeBEL to further e-governance initiatives using digital?
So good afternoon to all of you. Let me first describe what WeBEL is. It's primarily the state implementing agency under Information and Technology and Electronics Department, Government of West Bengal, whose primary job is to promote IT, ITES and electronics, industry and investment in the state, as well as to execute the digital initiatives that the state would like to take. So from this perspective, as you have already heard the Honorable Prime Minister in the morning, the first phase of digital innovations state had already adapted 6 years back and was one of the first, as well as has been awarded in the country as the front runner in adopting the digital technology. Now comes the second stage of the digital technology, which is in the form of analytics, blockchain, big data, and cybersecurity. These are the four pillars which are interconnected as well as which we cannot ignore for the future. Now there are two aspects to it. How would the state government look at it? As you know, it has already been spelled out in the morning that from the government side, we are looking at all these four, including innovation, as the next wave of wealth creation for the people in the state. The second part is the government itself will be looking at adapting the necessary technology, though it is disruptive, but it is going to bring about efficiency, transparency, and better governance. If it does so, then it is going to adapt to the same. So let's take, for example, blockchain. We had a brainstorming session with very pioneers of the industry who came from various parts of the India yesterday. And we are going to create a roadmap. Okay, one, to the citizen-centric, what it is going to offer from the government side, which will have better integrity of the data as well as faster, reducing the intermediary in process. The second part is government is also, through WeBEL, is going to create the infrastructure that is required to keep the government's cyber infrastructure safe. So there is a cybersecurity center of excellence created. They will have the roadmap and the policy. And the job of WeBEL will be to implement in the most cost-effective way to ensure that the various infrastructure of the state government, which has lots of data, safe, secure, and private, so that the privacy of those data are not compromised. Now, when we are thinking in this direction, we are faced with one big challenge is the availability of the talent, relevant talent, for the emerging technologies that is here to stay. We have recognized these 4 emerging technologies are here. Now, how do we ourselves do, as well as create opportunities for the entrepreneurs to avail this wave of opportunity and create wealth for themselves, as well as be a center for these technologies across, for the country from here. Now, to do this, we have to have the necessary infrastructure. Infrastructure, the physical infrastructure, as was stated by Mr. Bhaskar Ghosh, to be able to do this digital part, you also have to have the necessary physical infrastructure, which the state government has created, is creating also for the future, both in Calcutta as well as in Tier 2, Tier 3 cities. We have over 1 million square feet of infrastructure ready, which is occupied, and it is 500,000 in Calcutta, around Calcutta, and 500,000 across Tier 2, Tier 3 cities. From there, very high-end, good quality software development in these contemporary technologies are already being done by the local boys and girls there. Okay. All these infrastructures are also being made available to them at a very competitive rate, at a very cheaper rate, which is more promotional in nature. Coming back to the new technology which may be of, which will be of use, like blockchain for many of the government offices, let's say for land records. So these are, at the proof of concept stage where we would like to, before rolling out at a commercial stage, we would like to have the pilot stages done, as well as create 2 parts. One is the government as the consumer for the necessary entrepreneurs, as well as the entrepreneurs must have the necessary supply chain of the talent who has to do the job to fulfill this particular technology requirement. So in order to do this, also WeBEL has its own training wing and also has tied up with the national level training institutes who are going to impart not only in Calcutta but across the Tier 2, Tier 3 cities where our IT parks are already situated, to be able to make the resources ready for the skills that is required. So one is the supply side that is being ensured. The other side is the demand that is already being assessed from the government, and from the WeBEL side, we are ensuring that we have the right supply and we have the right solution to be able to implement that in the government. Now, coming back to the private sector, private sectors have been also using technology for their financial control, robustness, risk management. What I see in the government sector, that is also being done in the similar way. Right now, the last mile payout, direct debit to the persons, direct benefit to the persons, all the vendors who are now working for the projects of West Bengal are directly being paid. The fund management across IFMS, you can track the fund utilization across at any stage, as well as how is the progress of each of the project against which the funds have been allocated are also being, you are able to track on a real-time basis. So one is the adoption that government has already taken in the past for digitization. And now is the time where we are actively looking at these disruptive digitization to use for better integrity within the government, as well as to create the necessary ecosystem within the state so that entrepreneurs can come forward, make avail and leverage the ecosystem that the government is creating for them to be of service not only to the government but for anyone across the country or across the world to create their own wealth.
Thank you. I just wanted to turn to Mr. Deepak Sharma. You are working with Kotak Mahindra Bank, and you've brought about a lot of innovation with your digital platforms and stuff like that. So could you sort of explain, one of the fears that we all have is about the kind of risks that exist when you get into the digital transactions. How do you work in order to mitigate the risks in digital transactions?
Sure. So I think it's great to be here in Kolkata again. And just before I get into the specific risk, I'll just touch on a couple of things broadly covering as transformation theme in financial service, because as we drive anything new, there is also a risk element, whether you like it or not does come, right? So I think broadly what is driving the big bang change in financial services, and I think financial services are definitely way ahead of a lot of other industries, at least the way changes are happening, is primarily on the three factors. One is there is a ever-demanding change of consumers. I think customers are demanding change. It's not just that, banks or financial services they just love change and they keep changing things. So a lot is around customer centricity. The second, of course, is the core business model itself in terms of the costs, and the revenue is impacting the way we run our business. And that's something which is what we call our internal forces of change. And I think third, as some of the panelists also rightly touched, is on the technology itself. I think today when you want to do things, technology is available for us to accelerate that pace of change. So I think all these three are driving the changes, and the change is impacting on all the areas. Three broader areas where again we are looking at, and each area has its own element of risk, which I will touch upon. The first and largest, where the large focus today is on the transformation of your core business model. So for example, a lot of things which used to be paper at source to paper at the end, today has started to get digitized somewhere in the process, or the paper itself has got eliminated, or the wet signature that used to be the process of authentication has got replaced with Aadhaar-based or a biometric-based authentication. So I think what has started to happen is a lot of things that maybe as a consumer you don't see at the front end, but there is a substantial amount of digitization has started to happen in the entire workflow management process. For example, there was a time when we used to open accounts with a paper and signatures and form. Today, in fact, we open 80% of our new accounts only through biometric. Now, when we look at this, obviously the account gets opened in less than an hour. It used to take 6 to 8 days earlier. The productivity has obviously gone up by at least 2 to 3x. But at the same time, we have to make sure that the assets that are used in account opening, that means the devices, those are the biometric devices, are encrypted. You track whether those devices are enabled only on a certain application and it cannot be used on any other app. You have to also track the behavior of the users. Stuff like the mobile device management tools where you can remotely wipe off the content from an app or from a phone of an employee in case he or she leaves or probably the device gets stolen. So I think there are substantial amount of challenges and risks, but we strongly believe that as a bank, our core business is to manage risk and always work on the trust. The banks are there because there is a trust in the banking system. So unlike probably a lot of other industries where for the sake of innovation, we may end up, if not compromising, probably not giving that kind of intense weighted on risk. I think banks continuously use this from risk. Even when we look at, say, a digital channel adoption, while we have a pretty large customer base who uses already one of the channels, either it's online banking or a mobile app, but when we go back to those who don't use, and we often ask them that, why is it that you are not using it when you know that it's so convenient? And what comes as the number one reason or objection is it safe? Yes. So I think we understand that be it for payments, be it for transaction, be it for whatever you do in terms of account opening, the single biggest barrier today is about educating customers, letting them believe, and making sure that the systems are absolutely robust in terms of either there is an encryption, the way we protect our core digital assets, the way we prepare ourselves from any kind of a potential cyber attack. And I think that's where a lot of now time focus has become, because banks are increasingly becoming IT organizations. And while there was always a credit risk and operational risk and regulatory risk and all those things were getting measured, now this entire dimension of managing your entire cyber risk and it has become extremely focused area. And the risk is not just contained or governed at a certain level, but the way we allow these API accesses, the way we are putting in the kind of API managers to say that if there is an external developer who creates a solution, how do we track that? How do we ensure that the volume velocity checks are put in place? So I think there is a very higher alert. For example, a lot of industries are talking about IoT. We as a bank also are exploring with various IoT use cases. For example, a smart refrigerator or a car which can communicate, it can self-insure, or a refrigerator which can place order. Because typically what we see in any of these IoT or any new technologies, there is a flow of information, movement of products, and exchange of a financial transaction. Now, the entire risk around IoT is still something which, if it is to be used for financial service, we are not yet comfortable with. While there are IoT use cases, which in industrial IoT is pretty fine. So I think whenever we look at any new technology, while as some of my other panelists also rightly said, be it blockchain or AI or machine learning, I think we are using today technology in banking to reduce and eliminate risk to large an extent. For example, in credit collection or in delinquencies, today we have built an AI and machine learning based algo to figure out the customers who are most likely to default. What are the trends that you see before somebody is likely to skip an installment? So I think today technology is helping rather manage risk better. At the same time, being aware that there are so many new elements of risk that keeps coming when you pick up any such new technology. For example, as we experiment and work with the artificial intelligence-led interactive banking, we have also read about how some of the Facebook AI bots got rogue. So I think one needs to be mindful of the fact that when you look at any of these technology, you get deeper into it, understand the nuances of it, because at the end of it, before we touch a customer's life or whether we are looking at anything to do with financial transaction, it should come with something like a safety and assurance guaranteed from a bank. And I think that's what precisely we as banks look at.
But are banks ready to, give you that safety assurance? I mean, does any bank sort of say that, okay, fine, I think your money is safe, and you don't have to worry about it, that you can do a digital transaction, and you won't run the risk of running into trouble?
So I think in last year or so, if you see some of the new regulations, they are all consumer friendly. In case of any kind of a transaction where it is not because of a customer negligence, okay, banks are accountable. So I think as bank, that also brings in more onus. So for example, recently we just enabled a new solution called, if you're shopping online and if you're transacting for a transaction below 2,000 rupee, we will waive off the one-time password, because we realized there was a friction. Yeah. Because we realized that at the end of it, a bank has to take that risk. Then at least we should also have the kind of means to say, fine, we will balance convenience at the expense of risk. And we gave customers a choice to say, would you like that one-time password or you don't? Okay. And then we realized 20% of the customers, despite that, said, no, we want one-time password. But I'm glad that 80% of them, they found that if bank is managing risk better and I'm getting the convenience, yeah, let me use it. Or similarly, say for biometric. We recently launched biometric on our app, and a lot of banks allow biometric. But then we figured out that when you have a phone, be it a Samsung or iPhone or anyone, you use biometric to unlock any particular app. But these device manufacturers, they do not give you the biometric information.
Yeah.
Now, these devices can be used, you can use multiple biometric on one single device. Now, as you open these apps from a biometric access, you are running in somewhere risk if there are multiple fingerprints are there on the phone. How do you allow financial service transactions to go through? And at Kotak, we figured out that while we want to give biometric access, but even if there is a rogue entry into a mobile banking app, we cannot allow money to move out of a customer's bank account, even if customer is at fault. So to that extent, we said we will allow the view access, but if any money has to move out of a bank account, you still need to add an additional one-time password or an MPIN. So I think banks will have to constantly look at the customer experience between, there are technologies which you want customers to use, but at the same time, you have to look at if technology for any reason fails, it cannot fail the customer's trust in the banking. And I think that's what makes that job much tougher.
Yeah. I want to turn to you, Mr. Krishnamurthy. Yeah. So, when you give this advice on investment advice or tell your affluent customers that this is, come to me because I'm going to manage your portfolio better. One of the things that takes place in the industry is about a whole lot of mis-selling goes on.
Yeah.
And there's a lot of anecdotal sort of evidence of it where people are told something at the point which is it's a part of a verbal communication, and you get to hear about stuff which makes you excited about that product, and later on you discover that it's the product doesn't really have that cover because it was verbalized, it was oversold, it was missold. How does digital help you make sure that what you verbalize is what you deliver?
Yeah, I think it's a terrific question, and I'm sure a lot in the audience also have this question in their minds all the time. When you buy a financial product from any institution, any financial institution, the key question you ask is, are you getting what is being told to you, right? And I think this was one of the first principles that we tried to solve when we created Burgundy as a brand at Axis Bank, right? And I'll tell you what we did. So I think first things first, we are able to simplify and spell out very clearly what are the critical basic attributes of that product, right? And I'll give you a simple example. So let us say you have a gentleman who is, let's say, closing on his retirement, 60 years old gentleman, and he is looking to buy a product which is not in line with his risk appetite. Let us say that for a person, let's say, whose net worth is, let's say, 1 crore, a relationship manager is pitching him investment product of, let's say, 70 lakh rupees, which is 70% of his total assets. So very clearly, something is very incorrect given the total net worth of this client. So the way we catch this is at a system level, it would immediately trigger that such a product buy is not in line with your net worth and your asset allocation strategy. So we trigger SMS alerts and email alerts to the customer to forewarn saying, please be sure in terms of the choice that you're making here. And that's one leg of the journey whereby the customer is very clearly made aware. The second leg of the journey is putting the spotlight on the relationship managers by making sure that we follow a metric called net sales to gross sales ratio, whereby, especially for mutual funds, which is clearly the way the markets are shaping up, I think the larger, bigger mega trend which is afoot in our country today is financialization of assets. If you look at where India's wealth is stored today, if all Indians combined, estimates have it that India's wealth is about $7.5 trillion US. Now, almost 80 to 85% of that money is sitting today in real estate and gold. And only about 5% is sitting in the markets, right? So, very clearly the question that you ask becomes super critical, because if the industry doesn't answer it with a very strong fiber of trust, we are going to again shoot ourselves in our foot. So I think we are leveraging digital, therefore, in making sure that the reward mechanism for the relationship managers captures what is in the client interest, because I think all financial institutions will agree that we are trying to build the relationship for the life of the client, right? And that is in both the institution's interest and the client's interest. So as we do that, I think right from the culture setting, right from making sure that the core model, by the way, we practice at Axis Bank is trust but verify, which means that at every leg of the business transaction, we actually, for example, simple things. If a relationship manager is expected to do a portfolio review once in 90 days, we use the CRM tool, the customer relationship management tool, to make sure that that is indeed happening. And wherever there is a deviation, we catch that. We also trigger, at the end of every customer interaction, an SMS to the client asking him, how do you rate the advice that you got from the relationship manager on a scale of 1 to 10? So what is fundamentally the net promoter score? So whereby customers who rate our RMs or our institution 9 and 10 are promoters. Anybody who rates us 6 and below are detractors, and let's say 7 and 8 are fence sitters. So we actually look at the net promoter score, which is promoters minus detractors, and see where do we stand. And I think typically the best financial institutions across the globe are in the 70%, a score of 70 in the net promoter score. And that's where we are building our entire financial journey. And I think that's been one of our, and like I said, if there is a short answer to your question, it is the trust but verify metric. And making sure that the customers are truly aware of what they are buying. And especially in a frenzied market where I'm sure as we read the newspapers today, every day there is a stock hitting a 52-week high. There are mutual funds which are having historic inflows. So we are, as fiduciary responsible folks, repeatedly making customers aware of what are the risks involved in the journey. Because I think one marriage which can't be broken is between risk and return. So wherever you're seeing return which is super normal, be very sure that risk is a constant companion there. So I think, so like I said, I can't emphasize the lever of digital helping this entire customer journey in a very, very powerful way. And I think we are continuing to learn from it every day, because I don't think the industry has reached perfection. And we are working with SEBI and RBI very closely to make sure that we are tightening our process more and more.
Yeah.
Thanks, sir.
I just wanted to turn to you, Mr. Das, on, basically BNB Metlife, and you're dealing with this claims processing thing and stuff like that. So you're getting, possibly getting fake claims, possibly getting real claims, which often, there are a lot of customers who sort of say that, my claim wasn't passed, or there was a problem with this claim. How does digital make you sort of, aware of which claim is real and which claim is fake? I mean, is there any process by which you can determine that?
Sure. So I think this is something very interesting, and and we all, as a financial consumer, are more eager to know that how does it happen. So in a life insurance industry, and I will take away the general insurance later on, the only criteria to process a claim is a death certificate, which is issued by an authorized body. There is no other means. So it is as simple as that. But as you rightly said, we do get into a lot of investigations, clarifications, or queries while we process a claim, and that essentially takes the turnaround time to be a little high. Now, before I get into digital, why does it happen? Now, the first point of failure is that perhaps there was a mis-selling.
Okay.
So mis-selling can happen in various ways. One, as Mr. Krishnamurthy has rightly said, that your appetite is A, your risk appetite is A, your portfolio allocation is B, you have given X and you have given Y. But in the financial services industry, one of the most important thing of this is KYC, is about the identity of an individual. So unlike in the West, where you have a social security number, in India it's like quite complicated. We all know, so I'll not repeat. But there has been a serious attempt by the government to make Aadhaar a substitute of that. And we are all aware that we have a mandate as of 31st of December, whether it's a bank, it's a life insurance company, it's a telecom company, or a mutual fund, doesn't matter. If you don't do it, obviously you can't go ahead and do the transaction. So coming back to what the claim is. So if a part of digital, which is Aadhaar-based authentication, is already there, and it is integrated with the right government consortiums to share that data, the whole process is digitalized and it is easy, and it is just a matter of, as I said, it is as simple as that. The only criteria is that. There is no other criteria. So I think bringing all these 4 or 5 variables together is what digital is all about. And we are trying to do a lot of those stuff, but what happens is that because our life insurance is essentially a contract and we have a legal binding on this, the point of inflection as well as the point of exit is something which we are cautiously trading, because we cannot go back and question the law of contract. Because what happens if I digitally get something from a consortium and it's not a valid record? Yeah. We don't have laws. It's just assumptions. Yeah. So this is where we are talking about. But yes, I think the first attempt of trying to do it is already in process. Making that law happen with the cyber security, with the privacy laws, and with the event of so many laws which is coming, I think it's just a matter of time. And as you know, I don't know how much if you are aware, so I think the panelist here was talking about risk and disruption. So, you know, it's very clear, risk and disruption is inversely proportionate. So, on one hand, you know, what is going to happen from 1st of January 2018 is that without an Aadhaar, you actually can't, you are handicapped, you can't do anything, which is fantastic. For an insurance company who manages risk, I think half of the risk is covered. But what happens is from a risk is that the mandate which you have from the regulator is that we need to store all the Aadhaar numbers. We have 3 million customers in a vault, which is, in simple terms, no one knows what is there in the number. It's an encrypted form, and all future transaction is going to happen from there, and it cannot be in your core system. Okay. Now, while it's an excellent thing that with Aadhaar, you know who it is, what it is, the KYC is done, and there's no problem regarding email or anything. But on the other hand, there's a technology and an operation thing of putting it into a vault. So I was talking to our, our colleagues in New York, and I was telling that you guys have this, even we don't have that. So their social security is not in a vault. Okay. And we have enough instances which we have heard about those leakages, about those few numbers, whether it's the credit card number, it is the Aadhaar number, it is the PAN number, which happens. So it's a very interesting space to be in. The trick here is the balancing act. How do you want to balance while you still want to do whatever you want to do, while you digitalize, you disrupt, you innovate. At the same time, it's also important that how you keep yourself protected. I think that's the takeaway.
Yeah, but data breaches do happen. And how do organizations sort of deal with data breaches? I mean, in the case of government, I think there is this feeling that, you know, the government today is becoming, most governments are becoming more and more receptive to the idea of governance and stuff like that. You heard about the creation of the vault and all of that information there. But the largest repository of all of this number, because in the case of PNB, as he said, with the 3 million customers, but obviously with the government, you have incredibly more number of people. So the likelihood of a data breach, possibly in a government setup, is much greater simply because of the numbers. How do you deal with that?
There is huge data within the government. The data which has been digitized, primarily in the form of state data centers, there we do have a serious layers of security. Okay. Occasions of hacking or efforts to hack has we have seen, but it has not happened. But yes, it's a constant war. In case of data which are already digitized, that is one place which is, there is a repository of huge data, and there is a constant, security which has to be under surveillance to ensure that it remains safe. It's a continuous war. Then comes various data which are yet to be digitized, okay, which is there in the panchayat, and where presently we have to deal with the integrity of the people that is there. And that's where I think government seriously is adapting these technologies, which is going to digitize them as well as keep that integrity safe and distributed. So there is also a big mindset change happening that within the government we think of centralized data, and using this new technology, it is going to be decentralized data, yet it is secure, as well as the audit trail is there who is able to access it and not access it.
Okay.
I think if I can
Yeah, sure.
have the liberty.
Yeah, sure.
So, see, data protection is a science as well as an art. What Mr. Chatterjee just mentioned is all about science. So there are lines of defense, first line of defense, second line of defense, third line of defense, which ensures that it is protected. But organizations like us, there is also an element of art, is who owns the data. And that's a classical debate which you'll have in every boardroom or in any Mancom room, saying that who owns the data. Because it is very imperative that unless someone doesn't own it, the protection is secondary. So for us, as a Metlife organization, we have an enterprise data governance framework which we follow, and it clearly defines the ownership, which is the art part of it, to ensure that only once you own it, you will protect it. Otherwise, it's just passing the ball, and that's IT guy whose job is to make sure that nothing goes out, which is okay, but that's the third line of defense. I think that's a classical thing which a lot of organizations, matured organizations, are talking about, and bringing that element of ownership. Let it be any sort of data. It can be a customer data, it can be any data. But the ownership is very important, and that gets intertwined with the science about various technologies and various ways to ensure your vault and protection and encryption, blah, 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 to ensure that. So I just thought I'll add on.
Yeah.
You see, just one clarification. Within the government, the systems are also pretty robust, which is a new thing for me who have come from a private sector to come and realize that. The systems are very robust, and as I said, that ownership or the roles and responsibilities are very clearly defined. What is the dependency is the human element part. And that's where I had brought in that concept of the integrity of the person who has, on whom the dependency is, where digitization has not taken place.
Okay. Mr. Sharma, I just sort of wanted to ask you about, what trends do you foresee? in the digital space, in the banking industry. Are you sort of seeing, a possibility where none of us will need to go to the banks anymore? Brick and mortar sort of style banking, is that completely finished? Is that over?
So I think I'll answer your last question first.
Okay.
I don't think that's over.
Okay.
Neither it's going to be over anytime soon.
Okay.
The way we see the trend is emerging is what we call bionic banks. Bionic bank typically means machines and human will work side by side. You may end up becoming a supervisor of machines rather than supervisor of people. That has already started to happen. So that's happening even today. As I speak, we have people who manage bots, and we have bot managers. A lot of back-end processes have started moving into a robotic process automation. So instead of a routine work that somebody used to punch, type, now those are done by bots. There's a room full of bots. A supervisor manages, allows bots to start functioning, decides when bots should shut. And the governance between managing how people should manage machine has already started to happen. Some of the other major trends that I foresee now in banking that is changing is banks will become open banks. But that also means that today banks were manufacturers, distributors, they used to have balance sheets and they manage risk. Eventually, you will start seeing each of these will become very, very specialized areas. Already banks are distributors to certain products, for example, life insurance, mutual funds, etc., that they don't manufacture. But with open banking, what will change, and it has already started, is that the APIs banks will make available to developers and external ecosystem. And the ecosystem will start playing a much larger role in the financial service. So for example, in our mobile app today, we allow our customers to shop at Flipkart or at ShopClues or Indian Railways, book a ticket or a flight at GoIbibo. Now that's not core to banking. But the ecosystem where origination of a transaction to the payment can happen pretty much at one single place. That has started to happen. Similarly, you start seeing a lot of e-commerce companies have got into payments as a business. Yeah. So I think the lines are blurring. Fintechs are obviously, they were initially focused on payments, but they have got more into lending now. So I think increasingly you will start seeing these lines blurring. There will be an ecosystem of partnerships. We have already started seeing that happen in a big way in areas which are tech-led, be it AI or be it in terms of bots, be it in terms of machine learning. Today we work with over 100-odd fintechs through Innovation Lab, and banks are investing into technology companies. I think to answer your question, in next 2 to 3 years, you definitely will see a lot of tech people in banks. That number will continue to grow much, much faster. We have already started to see a lot of design people getting into banks. So there is an entire user experience design teams have started. A lot more data scientists than what we have today, because data is increasingly becoming a core assets that banks have started to realize, and they are putting a lot more of capability, be it on the machine learning side, data science, investing into big data, data lake kind of investments. So I think the entire architecture of banks, unlike in the past where we had large core systems and then system integrators and then you build those channels, these were pretty monolith kind of long payback, large capex kind of projects. I think that have started to change, and it has become more OpEx and build as you go kind of model. While banks are not fully on the cloud yet, but I think they have started to move on the cloud, not just from cost efficiency perspective, but in terms of your ability to scale up, scale down, where not necessarily the data will move to cloud, but applications will move to cloud. And so those are the changes. That means banks will be far more agile. They'll have better responsiveness. Digital channel is already, I think the adoption is pretty high, but I think for current account and SME customers, branches will continue to play a relevant role going forward. But a lot of retail customers and transactions have already moved to the electronic channel. However, mindful of the fact that we see there are three large customer segments that banks will continue to serve. Customers of yesterday, who still have a lot of wealth. Customers of today who are working professionals, borrowing, they are okay to go on to digital channels much faster. And millennials and customers of tomorrow, who may like to play around with areas like bots and trying to see what are the new cool things, how do you build banking and social together. So banks will continue to provide solutions to serve and address needs of all these three customer segments. And I think this will continue, just that the size of branches may come down. You may have the density of branches may get amplified through e-lobbies, because now banks are looking at making the ATMs itself do a lot more than just dispensing cash. So for example, we have started where you can go and you can deposit cash, check, you can do even your biometric based re-KYC. And you will start seeing many more digital-only products coming from bank. For example, 811 that we launched some time back, we ourselves were surprised that we were getting customers from locations where we never had a physical branch. So digital is changing the way banking is done. For example, from West Bengal, we found the number of customers from places like Nadia, Murshidabad, or from places like in Odisha, Bhadrak, or probably Rangareddy district in Andhra. I think we never saw those as large financial service markets, because we always thought branches, brick and mortar, that is the way banking is done. And moment we created some digital-only products, and we realized that the markets which were never probably on our radar have just become the large consumer markets. Even like from Bihar, we found Samastipur and Purni. I mean, I was surprised, frankly, let me tell you, when I looked at some 200 such locations where we never had a branch, and now we are thinking of putting up branches in those locations, because we think that's where customers are and they are coming to us through a digital medium and not necessarily by opening a branch first. So I think banking is fundamentally changing, but branches and technology, they will coexist to make the service more customer friendly and reduce the cost of operations for bank.
Mr. Krishnamurthy, I just wanted to turn to you and basically talk about, as technology disruption sort of takes place, maybe this is not a question that, you need a regulator, to deal with all this. What are the regulatory challenges? Do you see any regulatory challenges here in trying to control the disruption, or deal with situations which we still haven't yet seen?
Yeah, I think what you ask, I think Mr. Das had earlier made this point that disruption and risk are very closely interlinked.
Yeah.
Now, every time we try to invent the world in a fresh way, new challenges arise.
Yeah.
Now, I can tell you that from a banking regulatory standpoint, some of the questions which are out there, one is about identity risk. As each one of us in the panel, we've been discussing this. As financial institutions, we have a lot of information. So I think one of the critical accountability and responsibility that we as an industry have is how are we protecting that information. And I think Mr. Das had talked about the cutting edge level of security that we need to maintain for storing Aadhaar information, for example.
Yeah.
It can't really be held and everything has to be encrypted many times over. So that's one big play. And I think as unification of one standard number to identify every unique customer is happening, that's going to help the banking body to standardize capture of information as well. So, I think regulations are also challenged because regulations were created for an era where everything was simple. KYC meant that I knew the customer through a face-to-face interaction at the branch. We have, I think similar to the Kotak experience at Axis, close to 75% of customers coming through a digital route using tablets, like I said. Yeah. Our business development executives meet our customers across hundreds and thousands of customers that we onboard every day. They are on a tablet form. So I think that information which is getting captured, whether it is in the tablet, the form factor, becomes very, very crucial. So it's a massive challenge. I just want to, there's no ready-made answer. I think it's a continuously cooking dish, if I have to put it that way. Yeah. There is no full stop to this subject. The regulations are developing constantly as the information is getting more and more dynamic. In fact, the other big aspect that as an industry we are benefiting from is in credit underwriting. An example of, what is right and what is wrong. Can I, for example, scroll and trawl your social media information before I issue a loan to you? So these are some of the gray areas today, if you were to think about it.
But is there an ethical issue involved when you scroll and troll somebody's social media?
So it's a question. See, like I said, what is, I think at a very, very philosophical and a fundamental level, the question is, what is private, right? So if you post a photograph at Facebook and you are at an nth degree of link, so are you within your rights to pull that information to see if the customer, the information that he's actually providing in the form, that he actually belongs to a particular address, that he's been in the country for so many days, is that information tallying, right? The information the salaried person is putting out on LinkedIn to get a job, is that tallying with the information that he's putting to the loan officer? So these are critical pieces of the jigsaw puzzle that I think the industry is putting together. And like I said, I think my personal assessment is that regulations are at a very sound place and developing. As part of the banking industry and communion, we are constantly meeting and figuring out how can we improve ways and means of also monitoring our own initiatives. So I think a lot of work is happening in this arena.
Yeah, Mr. Das, I just wanted to turn to you. One area, obviously, in this insurance is the very low penetration of insurance, and and you have this monolith, which is like the LIC. And when you take on a challenge like this, and one way you could do this is obviously use digital. But how do you see this game sort of play out in terms of use of digital technologies too?
Sure. So, as just to put some statistics in perspective, is that in India, 85% of the population is still underinsured. So that's the size of the opportunity. So even though the big daddy LIC writes whatever million number of policies every year, the size of the opportunity is there. And the size of the opportunity is constrained today by the demographic landscape of population, which is on tier 1, tier 2, tier 3, and tier 4. Yeah. So while we talk about financial inclusion, we are talking about insurance inclusion. Yeah. Because that is also something, a sense, for a financial health. So it is not only getting the banking onto the mainstream. Insurance, which is life insurance, also is a very fundamental product where you can be inclusive to the financial thing. The opportunity here is that blur between the physical and the digital world. Because in any distribution architecture, whether it's a bank or it is an insurance company, obviously physical infrastructure is fixed cost in nature and it's bloody expensive. But does it mean that we don't penetrate? No, we want to go digital. So at PNB Metlife, as we see today, our penetration has increased. So obviously we have PNB as our distribution partner. We have around 10,000 branches of PNB at 1, 2, 3, 4 tier cities. And we ourselves have only around 120 branches for us. So how does the jigsaw work out? The jigsaw works out through our digital initiative, which we call is e-branch. So today, a sourcing of a policy happens anywhere, anytime, 24/7 into 365. And that's the opportunity where we talk about a few business numbers in terms of activation ratio, in terms of penetration level, it is increasingly. And as we speak today, when we see the data points, we see the traction more in the tier 2, tier 3 cities than tier 1 cities. So the adaptability seems to be fantastic. And it is also an extension of the mobile penetration which India has. So we have around 200% of mobile penetration, which is nowhere in the world. It's something very interesting to watch out. So insurance companies are putting a lot of effort, including ourselves, to ensure that we make our sourcing and our servicing digitalized so that, one, we come out of this constraint of the physical reach. Number two, increase the penetration ratio and thereby make the objective of making insurance inclusion in this Indian economy. I think that's the way we are going, and you'll see a lot of stuff happening around that place. And it's a lovely place to watch out with the MFIs coming in, with the small banks coming in. Everyone has an arm where you have a fee income which comes to them, and we are also partnering. So various means of ensuring that you go to the lowest strata to ensure that you reap it. And the results are interesting, I'm telling you that. And I think more to watch out as we go ahead in time.
Yeah. Mr. Chatterjee, I just wanted to turn to you. One of the areas of, opportunity and certainly growth is the area of e-tendering of contracts. And the West Bengal government has been talking about, moving into this area where all contracts, public procurement contracts, are e-tendered, so that to reduce or minimize the risk of corruption. So can you tell us about this journey and how almost 100% of it is going to be e-tendering very soon, or already is? How does that sort of work, and what kind of digital methods you using to ensure all that?
West Bengal has this WBFR, West Bengal Financial Rules. There they have given the limits within which you can do, less than 1 lakh, you can do normal tender. More than 5 lakhs, it has to be e-tender. Now, across all departments in Bengal, more than 5 lakhs, 100% is e-tender. Across all tenders in WeBEL, 100% compliance to WBFR rules is a necessity, as well as the way the mechanism of control is that MD, the head of the institution, has to give a declaration to the CM's office every quarter that the WBFR rules has been complied with relating to tendering matters. Okay. And this becomes a part of the audit from the CAG side as well. So this is the ruling as well as the compliance methodology as well as the checking methodology that which has already been institutionalized.
Okay. I turn to you, Mr. Sharma, again. And basically, it's about digital apps that banks are creating and stuff like that. Now, obviously, security is an issue when you're using apps and stuff like that. But is there a problem where people sort of can create fake apps which would clone your own app? Is it a possibility that, say, for example, how do you deal with that? That a fake app which sort of mimics your Kotak app?
Yeah, I think very valid question. yes, there are people who create fake apps. If that's true. Question is, how quickly do you detect and deter such things to happen? And I always believe that anything which does not give you a disproportionate economic return, people don't pursue such activities. And that's where we realized that a couple of years back, I think this practice was more prevalent. Both more so, I would say, the app stores have a screening process. On iOS, which is on Apple, this was very, very strict. So obviously, it was extremely difficult for someone to create a fake app on the Apple App Store. But we did witness that on Android, there were apps not just for banking, but I even found for IRCTC and for others, there were apps which were created and that were hosted with look-alike kind of as if you are getting into it. But I think we figured out that there is a continuous crawler that we put to keep looking at any content, any app, any information which has any name, resemblance, which may prompt. So I think as we keep doing that, we haven't found any such act in last, I would say, a year and a half. But yes, there are people who used to do that. But now they figured out that banks and financial institutions have become smart enough, and the App Store publisher, which is Android Marketplace, has also put far more stricter guidelines for people to just go and publish an app which may resemble like a financial service app. I think the challenge is not as much on app right now. But there are a lot of other genuine apps, but they prompt you to read all your messages. And if you don't give those acceptance to terms and conditions, you probably may not end up using those apps. And those apps read your transaction data. So especially your SMS alerts and all that. So we obviously caution our customers that while you may be delighted with the experience of using certain non-financial app, but be careful if those apps intentionally or unintentionally is asking for permission to read either your other apps on your phone or your phone book or your location or caller data or transaction SMSs. And I think that is something, while we keep educating, it's important for each consumer to be far more aware before they use any of the other apps.
Okay. Well, I think we've covered a lot of space during this discussion, and we can look at this subject extensively and cover various aspects. We've tried to cover a few of them. I hope all of you found some interesting insights into the digital transformation. We'll have to close the discussion here because we're running out of time. So if there are any sort of questions that you have, maybe we can take it all offline. It would be a pleasure to host this session along with 4 very illustrious men. And thank you so much for being a part of this discussion.
We thank our chairperson and our moderator, Mr. Soumitra Dasgupta. Thank you very much. And we thank our panelists. May I now request our volunteer here to kindly come forward. And I'd request Mr. Soumitra Dasgupta to give away the mementos to our panelists. We thank you, Mr. Samrat Das. Thank you very much, sir. Thank you, Mr. Deepak Sharma. Thank you, Mr. Satheesh Krishnamurthy and Mr. Aninda Chatterjee. Thank you very much for this very interesting session. We thank our moderator and our chairperson, Mr. Soumitra Dasgupta. Thank you very much, and our panelists for this very interesting session.